if you're still using support and resistance lines, you are plain and simple leaving money on the table. And many of you are probably consistently losing because of these stupid little lines, but you don't even realize that's the true cause. That's why in today's video, we're going to be covering 3 tools to add to your arsenal to help master supply and demand trading so that you can ditch those stupid little lines and start using supply and demand to ultimately improve your trading and investing. And by the end of this video, you're going to have exactly what you need to identify supply and demand and then use it effectively in your own trading and investing. So first things first, we need to understand how to draw in supply and demand zones on our charts because it's a form of technical analysis. Now, on our chart right here, we actually see a couple different things. We got a red line across the bottom. That's our volume point of control. That's not something that we're going to worry too much about. That's associated with this indicator over on the right-hand side, our volume profile indicator. We've got a blue line right here. That's just a simple trend line or a horizontal trend line that I can add here on TradingView. And then I have this white zone, this white box. That is a zone of supply and demand that we're going to ultimately use here in our own trading. And it's actually been a beautiful level that we've seen play out multiple times over the past couple of months. Actually, we're getting close to about 6 months of this zone being a valid supply and demand zone. And what we want to dive into is now how to utilize it or how to identify these zones so that you can start to draw in your supply and demand and then trade off of these zones. Now, step 2, we'll take it a bit further and we'll talk about how we can get a computer to do this for us and how to use some of these zones and see this in action. Then step 3, we'll talk about fake outs because that's one of the biggest questions when it comes to supply and demand is, well, what if there's a fake out? How do I, play the fake outs? How do I, protect myself against fake outs? Guys, number 1, that's part of trading. But number 2, there are things that we can do, and it just requires some patience at the end of the day. So we'll dive into some of those examples here in just 1 second. But first things first, let's start off with drawing supply and demand. So this white zone that we have right here, what was this zone initially created? This zone was initially created as an area of supply. Now, an area of supply is an area we can think of as resistance. So it's an area where we have price action come up into that zone. It falls back off, comes back up into that zone, falls back off, comes back up into that zone, falls back off. It's not one specific point. It's not one specific price to the cent. That's where people get into trouble. We talk about those stupid little lines, right? Because the problem with those stupid little lines is that, quite honestly, like this blue line right here is simply a double top that I saw on this chart right in here. And it acted as an area of resistance, but was it a perfect line like in the future? Not really. This area wasn't something that we could really get much out of. And it's going to make it confusing when you use support resistance lines to the cent versus a supply and demand zone. That's going to be a lot easier to trade, especially if you're someone who's not scalping. You could, of course, scalp supply and demand on the 1-minute chart, 5-minute chart for sure. But this can be very, very useful if you like to let the trade work and give it time to work without having to sit there and have to be ready to hit that keyboard, hit those hotkeys every 2 seconds. And to be honest, that's not what I like to do. And that's probably not what a lot of you guys like to do. And if you've done that, what you'll find is that maybe you can be right more than you're wrong. But guess what? That one big loser completely destroys you and wipes everything out. So some examples of demand. Okay, that initial example was supply, was a resistance zone. Now we have demand. This right here is Home Depot. What I like to use these specific lines for is just so that I have a reference point intraday or at some point in the future. Like, hey, we've had some big reactions at X, price point. I want to make sure I have that level charted on my chart just so that I can see how we react at that level. Now, if we're looking at this chart, can we draw in demand? So Home Depot right here, HD, what do we see? Look at the bottom of our screen. Here's a demand zone. Now, what I like to do when it comes to supply and demand, I like to get at least 3 touches. And when I say 3 touches, I want to have 3 distinct periods. Now, this, again, can work on any time frame. Don't get so caught up on the time frames. I want to see at least 3 distinct periods where we come down separate times, usually at least a couple of days apart. In this case, on the daily chart, if it's the 5-minute chart, maybe at least a couple of candlesticks apart, that we come down, test a level, or come up and test a level. And that area acts as an area where buyers come in and we start seeing price action reverse, okay? So it happens right here, it happens right here, and then it happens again right here. Now, what I could have done is I could have drawn this box, this zone in ahead of time, right, down at this level, before this price action, before we had this test right in here, before that occurred. And I could extend it to the right, and that's a good idea. So I'm going to extend this to the right. And then what am I looking for? I'm looking for the price action of Home Depot to come down into this zone, and I'm looking to buy this thing as long as this zone holds. But this is going to kind of factor into our fake outs section of the video in just a few minutes. But what I want to see is I'm not just going to blindly, I could blindly buy this and just kind of guess like, okay, if this area holds, great. It's a better, I have at least, prior support, prior demand on my side, like great. But what I'm looking for is I'm looking for a double bottom, a reversal candle, a bullish engulfing. I'm looking for some sort of reversal pattern, or I'm looking for a big wick. I'm looking for the stock price action to hold that level and start to reverse. And what I've seen is that the last couple of times that we got price to reverse, it didn't really matter if I missed the move by a day or two. Because what do you see? If I missed by a day or two, even if I missed by like a week, I still had really good opportunities here. If I missed by a couple of days, I still had days of upside here. There is still opportunity. And if I missed by a couple of days here, guess what? Let's say I bought it in here and my stop loss is down here. Well, guess what? We got massive upside since, and we've actually made a big move to the upside here on Home Depot just over the past couple of weeks. So there's opportunity. Now we zoom this into even closer time frames, and what you see right here is this. Take a look at this, a bunch of wicks. Look at how many wicks we have on the daily chart coming up right here. What's this? That's supply, my friends. And I take that supply zone and I extend it to the right. Guess what? Now I'm expecting Home Depot to find some support potentially here in this prior supply that is now becoming demand. And is this zone a super tiny zone? It's a smaller zone because I'm zoomed in than the prior one that we're looking at. But this is still a zone from looks like 315.75 up to about 317.50. It's almost a $2 range. So we're not playing off of a specific point. But now, what would invalidate this zone? What would invalidate this is potentially Home Depot coming down below 315 and closing down below 315. That would be what invalidates this zone. One last example of identifying supply and demand. Bring it in here to a 5-minute chart. What do we see? We're looking at the S&P 500, and what do we see? Stock comes up into this range and has many, many attempts. It actually spends a lot of time up here, and we see that this area, every time we get up into this area over 402, we see resistance. That was an area that has acted as key supply, and now we've traded back to the downside. In terms of some demand zones, what could we look at on this chart? If I was looking at this prior to the price action of this last day, what do I see? I'm looking back in here, pre-market action, intraday action, some demand there, and guess what? We tried to hold that level this morning, a break below, then a bounce up, and then eventually what happened was we fell through this zone, and this area that acted as a prior demand, once we had a couple of rejections in here, acted as supply as we fell below, and that was our area to risk off for a potential short trade back to the downside. And if we kind of zoom this guy in even further or zoom out a little bit further, what we're looking at now is where did the stock market, where did the S&P bounce? Well, it bounced pretty darn close to this dip buy right here, which also happens to be the highs of the day before that. So if I can draw this zone in right here, what are you going to see? That we now have an area that was supply turned demand. So when it comes to supply and demand trading, this is the way that I like to do it. Of course, you do not have to do it this way, but I like to always look for prior areas of support resistance, multiple touches into a zone, and I like to draw my zones that way. And ideally, I extend those to the right, and we look for reactions as a stock comes down or up into that zone, and then we can play it from there. Now, leading into part number 2 of this video, I want to give a shout out to today's sponsor, Chart Prime. Chart Prime is an awesome trading suite, algorithm, and community all baked into one. With Chart Prime, you get access to some incredible trading tools like automatic pattern detection, unique indicators, trading signals, and even a Discord community centered around trading education and building profitable traders. And don't just take my word for it. Here is a look into some of the recent member profit posts, and you can see that members are banking off of ChartPrime, whether that's the automatic patterns to build their trading plans, indicators, or even some of their awesome signals, and analysts who post trade ideas. Their indicators integrate right into TradingView, which makes it super easy to analyze your favorite charts, whether it's stocks, crypto, really you name it. Although many of the trading signals and the analysts in the Discord do focus on crypto trades, there's a ton to work with here. And I'd say that my favorite has to be the automatic pattern detection, whether it's indicating different technical patterns on the charts or that's candlestick patterns. It really helps eliminate a lot of the time that it would take to do your own technical analysis, and you can have essentially a bot, a system, an algorithm do it all for you. I will leave a link in the video description box down below if you want to check out ChartPrime, sign up, and get in on this action right now. They've got countless tutorials, webinars, and even live trainings that they run all the time that are meant to help you and cut down on that learning curve, giving you the best chance of success. Seeing all this and the community firsthand gives me a lot of confidence that they have your best interests in mind, and they want you to be able to capitalize in all aspects of trading, long, short, it doesn't matter. Again, I'll leave those links in the video description box down below. And of course, ChartPrime is hooking us up with 20% off. Use the promo code TCARVO, TCARVO at checkout and get started right now. Now, taking it a step further, when I implement some of ChartPrime's indicators on my charts, for example, I have the support resistance bundle indicator right here. This is actually a really cool indicator. And what I've used this for is to identify some of these supply and demand zones that maybe I can't see as well. And maybe this gives me a really good picture of some supply and demand. And what this support resistance zone indicator does is it just does that. So what I have right here is this support turn resistance level right here. So we have this level that we ended up coming up to as resistance initially, up to it again right here, and then we got above it. Cool. We had this prior resistance turn to support right here for that bounce back up. Then we came down to it, fell below it a bit, came back up and found that prior support now turned resistance. Full circle trade. So that's kind of one more additional example of using ChartPrime to our advantage here, just using the support resistance indicator. And that's going to be a great indicator or tool on really any time frame that you can use to your advantage. Take a look, guys. It lines up perfectly at the bottom here with a level that I would draw in demand anyway, down towards the lows that we're seeing. Now, fast forward here into part 3, and that's going to be how do we deal with fake outs? Perfect example we can actually see towards the bottom of our screen is this zone right here, this green box that ChartPrime drew in. And what I'm looking at right now is an area that is demand, but this wick right here is the questionable wick, because we had depicted that this zone, right, was from about this like 162.75 up to about 165, right? So a couple dollar range. But we had this wick that came down below that range. So what do we do in these scenarios? Like, do we just stop out? Do we get in? How do we play this? Now, of course, you could be in a trade already. You have to ultimately build out your trading plan. Is it going to be a 5-minute candlestick close? Is it going to be, on this case, a swing trade opportunity, a 1-day candlestick close? Is it going to be 2 consecutive 5-minute closes below a level or above a level that stop me out of a trade, telling me, hey, this is no longer respecting the pattern, respecting that supplier demand zone? That's what you have to do, because of course you can draw, these zones are subjective. You can draw them however you see fit. You just have to ultimately go back and correct mistakes and see, hey, I'm getting stopped out a ton. Why? And maybe I'm making my zones too thin. Maybe there's a bit of error that I have to give or a leeway that I have to give on some of these zones. So that's one way to correct that. But the best thing that I like to do is if I have this zone charted out and I'm looking for, IWM to come down here and maybe look for a buy, right? In this case, we had a crazy, crazy day, but there still was awesome upside, weeks after that move. I'm not looking to buy this thing the second it gets into my zone. I want it to come on down and let's get that reaction. What is it going to do? Is it going to prove that that zone is supply or demand? Is it going to prove right, or is it not? And I give it the time for that candlestick to form, for it to close, maybe 1 or 2 more to come after it. And then I have an opportunity to see how the reaction, plays out. And so in this case, if I did just that, yes, maybe I would have gotten in somewhere up here on this trade. But again, on the long trade, if I even did that and I had a stop loss below here, and I'm looking for a 2-to-1 risk reward, I would have gotten that. Actually, I would have gotten more than a 2-to-1 at the peak. So in this case, that 2-to-1 actually worked out really, really nice. And I didn't even get a great average on this type of trade. So in a perfect world, we wouldn't have as much volatility maybe as some of these candlesticks, but this just goes to show that, of course, it's never a perfect world. I would have loved to have gotten in somewhere down in here if the candlesticks weren't as volatile. But hey, it is what it is at the end of the day. So that is the best way, in my view, to handle fakeouts, right? If we get a big push above a demand or below a demand or above a supply, let that candle close. Great. I'm not entering. No. But if we get a bounce back or we get a retest or the stock pulls back or pushes back up, depending upon if it's demand or supply, then it could say, hey, wait a second. Even though we got this kind of false move or this false breakout, the rest of the move or the recent price action since has actually confirmed that that level was a valid level. It's time to enter with a stop loss above or below those recent higher lows. And that's how I'd go about playing those breakouts. So those are 3 ways to help improve, master, and get better, really, at the end of the day, at trading supply and demand. If you have any questions, comments, leave them down below. Again, that link down below for that 20% off coupon to Chart Prime if you want to check them out will be in the video description box and a pinned comment. Check out Chart Prime. Again, you guys, we're using the indicators right now in this video. So it's not like it's just some BS stuff. It actually works, and it actually is useful stuff at the end of the day. So if you think it's going to help you, maybe check it out. And I will see you guys in a future video. Consider subscribing, the thumbs up button. Peace.